All right, let's get into it. Today, we're deconstructing the Urban Company IPO. We're going to crack open the official story the company is telling investors as it gets ready to go public.
So you hear about these big IPOs, right? Well, before any of that can happen, a company has to drop this massive 500-page document. What exactly is this thing, and what's it for?
So, it's called a red herring prospectus, or RHP. And honestly, the best way to think about it is like the ultimate user manual for an investor. It's got everything, and I mean everything you need to know straight from the horse's mouth. The business, the money, the risks, it's all in here. Okay, let's dive in. So, here's how we're going to tackle this. We'll walk through it just like a potential investor would. First, we'll decode what this document is all about. Then we'll get into the nitty-gritty, the business model, their growth story, the red flags, and finally, the IPO itself, the numbers. Okay, so first up, let's really get a handle on this document. We've just covered what this prospectus is, and it's going to be our single source of truth for this entire explainer. All right, section 2, the business blueprint. The big question here is, what problem is Urban Company actually trying to solve? To get that, we need to look at the world they're operating in. So the prospectus paints this really vivid picture, right? On one side, you've got the traditional home services market. It's all over the place, inconsistent, you never know what you're going to get. Then on the other side, you've got Urban Company's pitch, a slick online platform that brings order to the chaos. We're talking standardized, reliable service, upfront pricing, and vetted pros. It's a classic disruptor story. And this is where it gets really interesting. They're not just some app that connects you with a plumber. No, they're building a whole ecosystem. They're training the professionals, giving them tools, even financing. And get this, they're even selling their own branded hardware like water purifiers. This is a big play to control the entire experience, from start to finish. Okay, let's move on to the fun part. Section 3, the growth story. This is the bull case, right? This is the story Urban Company really wants investors to latch onto, and it's all backed by their numbers. So, they kick things off with a huge number, 7.02 million. That's how many people have used the service in the last year. It's a big, impressive figure for sure. But the real question is, what does that growth look like over time? And here you go. This chart lays it all out. Look at that steady climb over the last 3 fiscal years. For a platform business like this, that's the holy grail. Why? Because every new customer makes the network more valuable for everyone else. It's a simple, powerful story of adoption, and it's exactly what investors want to see. But, of course, a prospectus isn't just a highlight reel. It can't be. By law, the company has to lay out all the risks, the bear case, if you will. So let's look at what they say could go wrong. And they don't bury the lead. Right there in the risk factors, they say it plain as day. Yeah, they've turned a profit recently, but there is absolutely no guarantee it's going to last. Think of it as a big, bold, mandatory warning label for anyone thinking of investing. And when you look at the actual numbers, you see why they have to say that. Look at those losses in 2023 and 2024. Huge. Then, boom, they hit profitability in 2025. So the million-dollar question for any investor is this the start of a new, sustainable trend? Or is this just a little blip of good news timed perfectly for the IPO? And it doesn't stop there. They also list out a bunch of other major challenges. You've got intense competition, not just from other apps, but from the regular offline guys, too. There's the risk of issues with their service professionals, the whole independent contractor debate. One bad experience can really hurt the brand. And that last one is huge. Changing regulations around gig workers could completely upend their business model. Okay, so that brings us to the final piece of the puzzle, the IPO itself. Let's follow the money. How much are they trying to raise? And more importantly, where is all that cash going? So the IPO is basically split into 2 buckets. You've got the fresh issue, that's new shares, and the money goes straight to Urban Company's bank account. Then you have the offer for sale, which is actually much larger. That's where existing shareholders, like early investors and the founders, get to sell some of their shares and cash out. This is a super common structure, but you always want to pay attention to how big that second bucket is. Okay, so what about the money that actually goes to the company? Where's that headed? Well, a huge chunk is going right back into technology and marketing. And this is key. It's not just about fueling more growth, it's also about playing defense. Better tech can help them avoid those operational failures we just talked about, and a stronger brand helps them fight off all that competition. Basically, they're telling investors, we're going to reinvest right back into the engine of our business. So there you have it. The prospectus really lays out the 2 sides of the coin. On one hand, you have this compelling story of taming a chaotic market with some really impressive growth to back it up. But on the other, you have the very real risks of a business that, let's be honest, has just scraped into profitability. So the big question it leaves you with is this: has Urban Company built a strong enough foundation to turn that recent profit into a real long-term success story? That's the bet investors will have to make.